Welcome, dear traders. At yesterday's meeting, the ECB raised the key rate for the first time since 2011. All three benchmark indexes closed higher thanks to gains in heavyweight stocks like Tesla and strong earnings reports of other companies. Apart from the zero-COVID policy and the surge in new cases, China has to deal with the other serious issues. Home buyers in China are boycotting mortgage payments depending on the country's real estate crisis. Find out how these and other events have impacted the Asian trade in our video review. Let's start. The European Central Bank managed to surprise investors yesterday by hiking the interest rate by 50 basis points instead of 25 basis points. Now, market participants are looking forward to the Fed meeting, scheduled for July 26 and 27. Risk assets are declining, whereas stocks are rising ahead of the meeting. Higher than expected second quarter earnings reports mitigated concerns about the economic downturn. So, Wall Street has been growing for the third session in a row. Futures for the US stock indexes are also up in the Asian session on Friday. US Treasury yields edged lower after the release of fresh data showing an increase in the US initial jobless claims and a decline in manufacturing activity. As seen on the chart, the Philadelphia Fed Manufacturing Index has been declining for the fourth month in a row. Yesterday's revised data revealed that production activity and new orders fell even more, sliding further into negative territory. Such a contraction is fueled by aggressive monetary tightening, so the regulator will have to make more cautious steps in the future when tightening policy. Signs of a recession are also bearish for the US dollar. During the overnight trading, it weakened following a fall in the US government bond yields and gains in the euro after the ECB's rate decision. However, many negative factors are weighing on the euro too. For instance, the global geopolitical crisis and the rising commodity prices. Besides, the European Union is dealing with the regional problems in Italy and other European Union countries. For this reason, the euro has halted its rally, and the US dollar index, which measures the strength of the greenback against the six major rivals, has resumed an upward movement. It was able to approach 107.08. In the Asian session, the US currency was moving in the range of 106.54 and 107.36. The yen lost momentum after rising the US dollar. Japanese investors have been cutting holdings of overseas bonds for a record 8 weeks. It appears that the Fed's interest rate hikes and soaring global inflation has sapped the demand for foreign debt. Although inflation is also growing in Japan, it's significantly lower compared to the reading of 9.1% in the United States. According to today's reports, the consumer price index in Japan totaled 2.4%, versus the previous figure of 2.5%. The core CPI in June came in at 2.2% against the previous indicator of 2.5%. Inflation in Japan is fueled mainly by increased import costs of energy commodities. Japan's finance minister mentioned that issue once again today. Shinichi Suzuki also stressed the need to monitor inflation and movements of the yen. Suzuki said that the weak yen boosted living costs in the country after the verbal intervention and a drop in the US government bond yields. The yen was able to spread its wings against the US dollar. Will the yen finally be able to snap the losing streak that has been going on for the 7th week in a row? The US dollar is not going to give up easily after the overnight fall of 0.67% and a rollback from the 24-year high of 139.38. The dollar-yuan pair is consolidating in the range of 137.00 and 137.95. It has already climbed to 137.57 amid an upward movement. The Australian currency is also declining against the US dollar. Manufacturing activity has been expanding for the 6 months in a row, so jobs available in this sector have been growing at the fastest pace for the 21st month in a row. At the same time, inflation remains one of the highest on a record. This is why the Reserve Bank of Australia has shifted to a more aggressive stance in the second quarter. However, stock and currency markets in Australia are down because of headwinds in China. Australia's main trading partner is struggling with an increase in COVID cases, mortgage strikes, and other difficulties. Nevertheless, the Australian dollar is unable to assert strength against the US dollar. The fact is that investors are cautious when it comes to rate hikes. Besides, the Fed raises the key rate more aggressively in comparison with the Reserve Bank of Australia. In the Asian trade, the Australian dollar fell to 0.6918. The AUD USD pair lost some of its previous gains, so its weekly growth amounted to 1.84%. It's trading in the range of 0.6896 and 0.6938. It's still hovering at the highest level since the beginning of March. We hope your trading has been quite profitable this week. Perhaps you have generated profit thanks to our video reviews. Feel free to leave your comments down below. Subscribe to our channel and keep close tabs on the market developments with us. See you!